Should we buy or sell these silver miners? So first off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So here are the silver miners. We are 5.6% away from the 52-week low, but we are an astonishing minus 39.70% away from the highs. So very deep in bear market territory. So here is, the chart, weekly data points. So this is definitively a very big picture. So it is very messy because we have seen, previously that there's been some absolutely astonishing rallies for the silver miners. So let me just draw it in. You see, this rally here is very analogous to this one. And, as you can see, after, that rally, you had a protracted downtrend. So by analyzing the previous time we had a downtrend, we can get a bit of an idea about what we could expect to happen going forward. So I think that the C19 lockdown, it was a very unique event. So it makes most sense to measure it from these lows here. But you can see minus 59%. So that was pretty substantial in terms of a pullback. From this high here to this recent low, minus 50-ish%, down here minus 52.38. So as far as the pullback go, we are pretty similar. If we measure the duration of the downtrend, from the previous peak down to the a very key low, that was 119 bars, 833-ish days. So far, we have had a 700-day downtrend. So we have approached a certain percentage pullback and also duration that has formed key lows in the past. And if we measure some of the previous rallies, like this rally here as an example, 23-ish%. This rally here, it turned out to 51-ish. If we go here to the daily data points, we are certainly below all kinds of moving averages. If we go here and look at these overbought, oversold indicators, first here on the weeklies, in terms of the RSI, we are very, very low. We are at a level that has formed lows in the past, but there have been times where we have been even lower. The same thing here with the PPO. Now we have reached a point where it is getting more and more dangerous for the bears. So even though the bears are still in control, this is a place where it is very dangerous to be short. Looking at the dailies, we see something similar. This is risky territory for bulls, but it is arguably even more risky for bears. So in the laboratory, I write RSI and PPO support, especially here on the weeklies, and I give the bulls a 2. So this is more favorable to the bulls, but not in like a very strong way, but it is frankly a dangerous place for the bears here. When we look here to the right, seasonality, so over the last 10 years, you can see that there is some bullish sentiment here leading into early July. The same thing here over the last, if we go here in green to the last 5 years, it is more broadly bullish, and over the last 7 years here in blue, there is something a bit bullish here about the current month of July. Looking to the left, July over the last 5 years is the second strongest month with an average 6% gain. Over the last 10 years, you can see that July and August, they are some of the strongest months for the silver miners. They just are. If we go here and go big picture, the last 13 years, then we see that July and August are the most favorable periods for the silver miners. That's bullish. If we very quickly here look at silver, which obviously is very relevant, then we can see, if we go here to the last 10 years, July is pretty decent. And 17 years, Yeah, July and August are strong months for silver. So I give the bulls a 4 here on seasonality. July is simply a strong month, and it is even better that August is also decent for silver miners and also silver. So this is very interesting. Here I am doing the fundamentals, looking at silver miners ETF, SIL, versus XME, which is the metals and mining ETF. When we go here to performance, looking at year-to-date returns, silver miners are down minus 29% versus minus 5.5 to 55 here for this for the broader miners. Beta is lower for silver. Price earnings is definitively much higher. The dividend yield is more than double what you get with the broader miners. Looking here at the holdings, 31 versus 35. Unsurprisingly, the silver miners ETF is way more specialized. Some nice mix here between mid, small, and large caps. Even having some micro caps here, because many people think that there are only like large caps in the SIL ETF, but obviously not. I do give 2 bulls here on the fundamentals, especially because the beta was lower, and also the dividend yield was pretty decent. But there were some other issues, but overall it's more bullish than bearish. Let's look at the correlations. Weekly data points, and we do have 44% positive with the S&P 500, 87% with silver, minus 38 with the 10-year treasury yield, and minus 80% with the dollar index. Now, looking longer term, you see that the relationship between silver miners and the dollar index has varied a lot, even being positive for some periods here in 2019. Looking at the daily data points, 81% here with S&P 500, and you do have 81 as well with the silver miners. Yeah, so 81 here with silver and minus 64% with the 10-year yield, and minus 72% here with the dollar index. So yeah, the strongest correlation we do get is with silver. So let's have a quick look here at silver SLV, starting with the weekly data points. So the problem for the SLV is that we did have the red 200-week moving average, historically a very important moving average. We did just eviscerate it this week, very unfortunate. Then again, we have fallen down to an RSI and PPO level that is a high risk for the bears in the same way that very high RSI is high risk for the bulls. Going to the daily data points, we are at an RSI support level. When we compare the silver miners with silver itself, we do see that silver miners, they certainly have underperformed silver for some time. Looking at the RSI, we are at the low end of the range of that relationship. So we are quote unquote due the silver miners outperforming silver. Looking at the seasonality, so let's zoom in. So in green here, over the last 5 years, you do see that silver miners have a tendency to underperform leading into the 11th of July, and then we see some outperformance. In red, over the last 10 years, a bit of a similar period, and over the last 7 years in blue, it's a bit. 22nd of July is sort of like the period where we do tend to see the silver miners outperform silver. Then we compare silver with the S&P 500. We are definitively in a very interesting territory. So let me just draw it in. You could make a very, very strong case that we have some horizontal support-ish behavior here. So we have gone from having a very clear downtrend. So let me just draw it in. This is very clearly bearish. Now it is way more of a consolidation pattern that potentially could resolve to the upside. This is interesting. very much so. So let's look a bit here at the seasonality. So like that. So in red here over the last 10 years, so let's measure it like this. Usually silver outperforms the S&P broadly into July, through larger parts of July. In blue here over the last 7 years, some outperformance, and in green over the last 5 years, we tend to outperform, leading into early August. So I give the bulls a 3 here on relative performance. We did see some interesting things versus the silver ETF, and also especially comparing silver with the S&P 500. So we are in a favorable period now for silver and the silver miners. So July and also August, they are expected to be good for this ETF. So the line in the sand is definitively the RSI and PPO support that we found on the weeklies. And given all the data we have here with the 2.8 score, there's more reasons to look for bullish opportunities than bearish. I see that we have some time left, so I will just run through some more or less random stocks. So let's look here at Electronic Arts. Yeah, we have fallen back a bit here to the lower end of this massive price range. So that's potentially a bit interesting, but this is also a bit messy. On the topic of video games, let's look a bit at Activision Blizzard. If we go here to the daily data points, so let me draw it in. We do have something that the bulls could, if they can muster it, turn into a pretty substantial inverse head and shoulders pattern. It is a messy inverse head and shoulders, given that the right shoulder here, thankfully, it is not yet, it hasn't taken out this level so far. So it is currently above that key low, but the bulls need to rally soon. And the challenge here for the bulls is that the blue 100-day moving average is very likely going to offer some resistance. On the topic of metals, here is Freeport-McMoRan, copper, and gold. So people were so bullish on Freeport not that far back, but we have definitively seen a massive pullback, just smashing through all kinds of moving averages, horizontal support levels, you name it. So let's look a bit here at the dailies. What about the RSI and PPOs? Yeah, we are towards the lower end of the range. So it is a place where, like, if you have a short position on Freeport-McMoRan, and you have had multiple weeks in a row of selling, there is a certain point where you start to take profits, at least tighten seriously your stop level. So, and when those stop levels are triggered, it means that the short seller will have to buy Freeport-McMoRan back in order to close the position. So you could get a situation with Freeport where the speculative bulls help propel the stock, at least form a bit of a low, and also the short sellers that just have to cover, and will cover automatically if they have some stop levels. So here is a General Electric company, very, very old school. We do have an interesting pattern here that is repeating. So it is not like a textbook inverse head and shoulders pattern, but it is a bit of a similar logic where you have a major low, and then you had a smaller low back there on the left shoulder, and potentially we could form that other confirmation low here on the right shoulder. So still the bears are in control, but it is a bit interesting. Let me just draw it in. You do see that the selling stopped at an historically very relevant level, at the low of the left shoulder. So if we are going to form an inverse head and shoulders pattern here on GE, this would basically be the level to form it. So this looks interesting. To be perfectly clear, this is just a lightning round of just technical analysis, and my method, of course, is to look at the technicals, seasonality, fundamentals, relative performance, just very holistically. So we looked at a bunch of interesting stuff here. So very interesting times in the market for sure. So if you want a bunch of other content, then you just go to diamondarm.com and have a great week ahead.